Hey guys, I'm going to share how to use the coolest mortgage calculator here. So here it is. I've had this thing since 2006. This is probably, honestly, this is like the third or fourth one probably, but when I started in mortgage back in 2006, I was given one of these, and these things are awesome. And they actually make a app that looks exactly like this. It's like a photo of this, which I'm going to share the link. So anyway, here are the features. So these four buttons here: loan amount, payment, term, and interest rate. The coolest thing about these is you can plug in any three of the four variables and it'll give you the fourth one. So, the easiest or the most obvious way to use this is, let's say you want to calculate a mortgage payment, and okay, they're borrowing $200,000, for example. You would type in 200,000 and you would hit the button that says loan amount. Next you plug in their interest rate. So let's say they have a 5% rate. Hit 5 and hit interest rate. And then lastly, let's say they're on a 30-year term. You're going to hit 30 and then you're going to hit term. So here's the cool part. Now that you have three of the four variables plugged in, all you do is hit the fourth button and it'll tell you what that fourth variable is. So in this case, we're solving for the payment. You're just going to hit payment and boom, there is the monthly payment. Now keep in mind that's just P&I, which is principal and interest. So you would need to add taxes, you would need to add insurance, and you need to add PMI if they're paying private mortgage insurance or mortgage insurance premium on FHA. But anyway, you get the gist of it. This calculated the base payment, the principal and interest payment for us. So that's the most obvious reason to use a mortgage calculator. And again, this is my favorite version of the mortgage calculators just because it's so simple. But you can do other things with it. So let's say that this is your monthly payment, right? But let's say you want to pay extra to pay it off in 25 years. Well, you're going to write down this payment because this is your required payment on that 30-year note that we just calculated. And then you're going to solve for the higher payment amount to pay it off in 25 years. So again, you'd want to write down this number because when we get the 25-year payment, you could subtract this to find out the difference, to find out what your difference in payment is to pay it off in 25 years. So let's just remember it for now. It's about $1,073. So again, let's say you want to pay it off in 25 years. So you're going to know the other three variables, but again, we're solving for the payment. So we're going to put in 200,000 as our loan amount again. You're going to put in 25 for your term. So instead of 30, we're putting in 25. You're going to put in the same rate, 5% for this example on your interest rate. So you put 5, then you hit interest. And then lastly, you're just going to hit that button that says payment. So it's $1,169. So what was our other payment? I think it was $1,073. So you can see here that it only costs $100 extra per month to pay off this mortgage 5 years early. So anyway, a really cool calculator. Again, you can plug in any of these three variables. So, let's say someone tells you, okay, I know how much I can afford per month. You would plug in that payment amount and then you'd plug in the term. You could assume a 30-year term unless they're trying to pay it off really quick. And then you could assume the interest rate, and then you could hit that button that says loan amount, and it'll give you the principal amount that they could finance for that payment. So anyway, I realize it's a lot of information, but if nothing else, you can use a calculator like this to calculate a monthly payment if you've already got the purchase price, therefore loan amount, and you know what kind of term they want, and you know what kind of interest rate is available. So fun stuff for a nerdy guy like me. Cheers.